Hi, good afternoon, everyone. Thank you for joining us today at the very last seminar discussion today on insurance, the all-important safety net for your financial goals. So my name is Karen, and I'm honored to be your moderator for today's conversation. I'm excited to facilitate this discussion with a panel of experts who bring a wealth of knowledge and diverse perspectives to the table. Please join me in welcoming our panelists, Bernard, Gerald, and Ron. Each of our panelists has a unique background and expertise that will provide valuable insights for us today. So let us take a moment to get to know our panelists better. Each of you play a crucial role in today's discussion, and I would like you all to briefly introduce yourself. So Gerald, would you please start by telling a bit about your background?
Yeah, very good afternoon, everyone. Thank you for joining me today. So I'm Gerald. I'm currently working as a BD with iFAST Global Markets. So being a background of myself, I spent most of my career as a social worker, a youth social worker, before moving into the FA industry as an advisor. So the first stop of my advisory practice was with AXA Insurance, then before moving to Money Hour as a client advisor. So I guess my main market is more towards the mass market clients, day-to-day Singaporeans looking for insurance review for your portfolios. And from there, we focus more on conflict-free and low-cost insurance solutions. Yeah.
Thank you, Gerald. Ron, how about yourself?
Hi, thanks everyone for joining us. My name is Ron. I'm from the FSM Investment Advisory team. So I think maybe some of our attendees today are a bit curious, like maybe all along you thought FSMOne is just a DIY self-service platform. But actually, we do provide a lot of hand-holding in terms of administrative support and advisory service for our clients. So I'm actually part of the investment advisory team. So anytime you want to just bounce off ideas, or you want to know like whether certain markets are good to invest in the upcoming year or so, you can always reach out to FSMOne Investment Advisory team for for just like a brief discussion. It's all complimentary. So that's what I do in FSM, and also for insurance, we do cover insurance as a product. So definitely, it's something we can discuss on.
Thank you, Ron. So Gerald, so Bernard, can you share a bit about yourself?
I think I see a few familiar faces over here. Every year I'm here at FSM Expo, I see some common faces to be here every year. So I run investment advisory, but of course today's topic is on insurance. So maybe something interesting, because I manage wealth for families. My role is not just into investments, but I handle the actual end-of-life process for clients as well, down to actually handling bodies as well. So that's my part of the specialization, not just the investment, but the whole wealth that covers their end of life.
All right, so now that we have a better understanding of our panelists and their areas of expertise, let's dive into our discussion. To kick things off, I would like to pose a warm-up question that sets the stage for our conversation today. So when meeting clients who are mainly interested in investing and hesitant about insurance, how do you strike a balance between addressing their investment goals and ensuring that they have enough insurance coverage? So Bernard, let's start with you to share your approach.
I look at the contrast between insurance and investment quite clearly with my clients. And I think the first part is that a lot of clients, they might be saying they just want to invest. I just share a very real case that I always work with. I'm 40 plus, approaching 50. I have some friends that I cycle with a lot, and we cycle a lot approximately 100 km per trip one. And very recently, I have two friends who did heart stents and heart balloons. They had a near heart attack when we were cycling. I had another fellow cyclist as well, also same age as me, 45, 46. He had a leukemia relapse. So one thing I want to contrast is that investment will take time to be accumulating, but the most important part is that while we're accumulating, sometimes issues can happen across over to us, like health issues and medical issues. So how do we reduce our possible impact? Like example, today, if I cycle halfway through, I suddenly have a heart attack, my investment may not have accumulated to reach the sufficient amount for me, but yet I can't work and I can't invest more anymore. Then that's where the insurance methods comes in.
Thank you, Bernard. So, Gerald, how about you? Is your methodology similar to what Bernard has just shared?
Yeah, I think when Bernard mentioned his clients, I do also have an unfortunate experience with one of my clients who had to file a claim. And this claim, right, was actually his daughter. And his daughter is only 3 years old, so diagnosed with leukemia. So when I was really just processing the claims for him, it was like I have to double role as both an advisor and also more like a counselor to just listen to him and hear him share. But without this pool of payout, right, which is guaranteed, the family would have to go through a really tough period of time. But because of this payout, it really helped the family financially. Yeah. So to answer the question on like for clients who might be more inclined towards investing and not insuring themselves, I always like to share this dichotomy. So it is not a chicken or egg first problem, but really when it comes to insurance, it's like a car. Would you rather have a car without an accelerator pedal or without your brake? But the truth is you cannot have a car and expect a safe journey if you have only one of each, right? You need to have both then in order to secure like a reliable journey, right, to your destination. So when it comes to investing, the accelerator pedal helps you to move forward. But when it comes to insurance, it is your brake that helps you to avoid hitting obstacles. Right, so in a holistic and sound financial plan, you actually need both. Yeah.
Thank you, Gerald. Okay, so we have a question here related to the common financial saying, buy term, invest the rest. So could you share your thoughts on this financial strategy? Let us start with you, Ron.
I think another way that we can look at buy term, invest the rest is why buy term in the first place? Because there are actually a lot of options to get yourself covered out there. But I think for term, the biggest draw would be for one of the lowest prices in the market. You're actually getting one of the highest coverage. Of course, if you buy a whole life plan, it comes with cash value, all that. But the price to cover yourself for that particular amount for a whole life plan compared to a term plan, it could be twice or even 3 times the premium that you are paying. And personally, not saying anyone should do this, but I personally surrendered my whole life policy to switch to a term policy. Because for the whole life policy that I was previously paying, the premium was getting more and more expensive to cover myself. And because of the high premium to cover myself for that particular amount, I was actually missing out on a lot of market opportunities to invest in other assets. So I actually lost $10,000 when I surrendered my whole life policy. But I think I made the right choice because now my premium is much lower, and for the savings, I'm actually putting it into investments that are working harder for me.
Thank you, Ron. Gerald, how about you? Are there any factors that an individual should consider when deciding if this strategy is suitable for their financial goals?
I think adding on to Ron's point, right, for clients who have managed to secure a term insurance following a previous whole life plan that you have, I think it's important to remind yourself to invest the difference. So the slogan is always buy term, invest the rest, but it is not necessarily the rest of your entire income, but more on the allocation, the difference of previously on a whole life plan, what is now your cost savings, to remember to invest this difference. Yep. So I think anyone onto the point of also whole life plans, I think when you are talking about insurance, first and foremost is to establish what your need and reason for insurance is. If your need and insurance is really just need for insurance is only for pure protection, then let it be protection. So you can actually just look for insurance through a term plan. And if you want to invest, look for other low-cost investment options. Don't jumble the two, which makes it harder for you to monitor. Yep.
Thank you, Gerald. Bernard, do you agree with what both of them have just shared?
I actually agree with all this part that mentioned, and maybe I share a small trick over here. For some of you guys, because I've met you personally before, my guess your net worth will have increased to probably $500,000, 800,000, or even more through investments. I think that's a wonderful investment strategy that you have on. And some of my high net worth clients, like some of you guys, what I do is that I top up a little bit of term insurance across for them, because we know that all of us here we will die one. It's about when. But since this event is a certainty, and with a small premium from a term plans, I can probably, at the point when I'm no longer around, suddenly my net worth will jump by another $500,000 or jump by another 1 million through these events that will definitely happen. So that's where that's a small trick you can consider using. So that's where that term part comes in to complement the investment a lot.
Thank you, Bernard. So we have discussed about the buy term, invest the rest approach. And let us delve into the insurance product and how this will work in practice. So Ron, what are the products available in FSMOne that is aligned with this principle, and how can individuals leverage on this in their financial planning?
Correct. So and in iFAST, we actually launched the iFAST Digital Term Plan in 2023. And it's actually a very simple and straightforward plan. It covers you, the base plan covers you up to $1 million in death benefit. And also for optional riders, you can consider adding on permanent disability, hospital income replacement, and also for cancer. So and the good thing about the cancer rider is a lot of the insurers out there, the premium for the cancer rider actually increases by blocks of 5 years. For us, we only increase it in blocks of 10 years. That means if you bought the iFAST digital term at 20 years old with the cancer rider, the premium for the cancer rider actually stays the same until you are 30 years old. So that's one of the hacks, I would say, when it comes to having the cancer rider. And also the cancer rider is an additional rider. It's not an accelerated rider. So in layman terms, what it means is if, let's say, for example, myself, I have the iFAST digital term. If I were to contract cancer, I can claim the cancer benefit without touching the sum assured for the death benefit. And if later on I do pass on, my next of kin will still inherit, or rather will still be able to claim the death benefit.
Thank you. So Bernard, since we've heard so much benefits about the iFAST digital term, any other points that you would like to highlight or raise?
Well, this part on the negative parts, I use term plan for most of my clients, but sometimes there's some scenarios that I may not be using term plan. Okay, maybe I use this example to share with all of you. Sometimes I make plans for very young families where they are thinking, hey, once there's a newborn child, a young child, they may want to buy a head start insurance plan for that child. In that situation, maybe I may not use term plans because that child is very young. The cost of insurance is going to be very low. So if I use the term plans, regardless even the low cost, that young child from age 1, age 2 is going to pay for the whole life for his insurance plan. So in that situation for a young child, I may not be using a term plan. So that situation, the term plan may not be suitable. But for anyone beyond maybe secondary school, that means from maybe 18, 19-year-old onwards, then a term plan will be very suitable across for them.
So what other options are there available in FSM?
Oh, okay. In fact, within FSM, we have 10 over independent insurers that we work with. In fact, if you know all this insurance, we've been working with different partners and insurers out in the markets. And I think if required, you can always come in to do very good comparisons for all of our clients over here. Of course, one very interesting part not many are aware of. Some of the insurance, actually, there are commissions that pay over to us, and we want to reimburse or even to rebate some of this commission backwards over to our clients as well.
Thank you all for your insights. As we are nearing the conclusion of our session, I'd like to invite each of our panelists to share some closing thoughts or any last piece of advice. So let's start with Gerald.
I think most importantly, I would like to just remind clients, I know like FSM Expo is like a mainly investment kind of expo, but I think it's key to remember to not neglect your insurance needs. Why? Because ultimately we are protecting our biggest asset of all, which is not our car, not our house, not our investment portfolio, but actually ourselves. And we are our biggest asset really because of our ability to earn. if should we lose this ability to earn, the likelihood of us going into our investment portfolios and savings to meet the immediate needs of our family will be pretty high. So in this case, should you require any kind of insurance review, do feel free to speak to our advisors. We'll be more than happy to see whether you are insured adequately, and from there we can even recommend products that are really fit for purpose for you.
Thank you, Gerald. Bernard, how about you?
Okay, I think we spoke a lot about investment and then insurance. So we say that investment insurance always comes together. But I also look at insurance, it always comes together with a will. So if you can be insured for $500,000 or maybe $1 million, but if you don't have a will together across with you, then my question is that $500,000, who are you going to pass it to? You don't want yourself to be very well insured, and then after that, your whole family fights over that $500,000 or $1 million. So maybe to end off, I always encourage you guys, get your investment done. I think over here we have a lot of info for you to support you. Get your very cheap insurance done up. So I think term plan is a wonderful option. But with all these things together, if you have invested maybe $500,000, and then you have $500,000 of insurance, ultimately, this has to be passed on over to your next of kin, to your children, to your spouse, to your husband, wife, or to your partner. So the will is something important. Yeah, of course, head out to FSM counter. I think we provide that service across with us, although it's not as well known. But let's buddy these things together.
Thank you, Bernard. Ron?
Okay, basically, if my two co-panelists have already shared quite a bit on insurance, so maybe I just remind everyone of some of the promotion we are conducting for our clients today. So basically, we have the $20 account opening promo for people who haven't opened an account with us. So you can take that $20 as like offset for your insurance premium if you buy the iFAST digital term through FSMOne. And also for us, on top of the $20 you're getting, we also have the insurance rebate, commission rebate, for our clients, which, okay, correct. So I think a lot of our clients, they are actually concerned about how much commission some of the agents are getting when they buy when they buy any insurance. So basically, we do have a commission rebate scheme for clients who buy insurance with us. So and the tier is based on the client tiering with us. It's permanent. It's not just for today only. It's not just a promotion they are running today. It's a permanent commission rebate. And for usually within 3 months, you'll be getting the commission rebate credited into your cash account.
Thank you, Ron. So I really didn't know that we can save so much insuring through FSMOne until recently as well. So since we have come to the end of our panel discussion, just like to recap and illustrate how straightforward it is to transact in iFAST digital term on our platform. So can we go to the next slide? Yeah, so just a recap, iFAST digital term is exclusively available for FSMOne clients, and it is designed jointly with 𝗪𝘆𝘀 Insurance. So we give you the flexibility to customize the coverage that you need, and in minutes you will be able to incept your policy without any medical checkup required. So next slide. Yeah, so this is a demonstration of how easy it is. Okay, you can just, no obligation, you can just get your quote and answer a few questions, provide your details, choose your coverage. So first of all, you need to let us know what is the basic coverage plan, okay, followed by the riders. Okay, you can tailor it yourself. Okay, then you can proceed. Okay, then you'll be able to see these three medical questions prompted. Okay, then you log in. Okay, so on the right, you'll be able to see what is the premium that you need to pay for this term insurance that you have designed. Okay, so next slide will be on how easy it is, okay, to pay for the iFAST digital term. So you can utilize your iFAST cash account, FSMOne cash account, which gives you interest rates. Yeah, when you put your monies inside. Okay, then the payment, you can see back and relax because we will take care of the automatic renewal for you yearly, okay, and it will just deduct from the FSM cash account. Okay, so I will go to the next slide, okay, to summarize insurance at FSMOne. So at FSMOne, we believe in simple, affordable insurance product with no commitment, and also to give our investors the opportunity for wealth growth. So hence, iFAST Digital Term was launched to address this. We also independently work with a network of 10 over insurer partners to provide the best value for our clients, like what Bernard has mentioned. And last but not least, the transparency and rebate program that was mentioned by Ron, where we allow our clients to save more when insuring with us. We are also one of the few firms out there that you will be able to get insurance rebate based on the total commission. So as we are running out of time, we're welcome to take any Q&A offline at our iFAST Digital Term booth. And thank you once again for attending this panel discussion.